Now, I know many of you trade options. I would venture to say that probably 75% of everybody reading this or watching this video or reading my articles or going on to the Wealth Press site or the Market Geek site is an options trader. So one of the questions that I get is, how do I maximize my profits with options? All right. And it's a great question because options can be somewhat elusive, especially for beginners. So I'm going to share a story with you today. I've shared the story only with my elite members in my boot camp, but I'm going to share the story with you today, and I think you're going to get a kick out of the story. I swear to you, this is a true story. I'm not changing any facts. And the reason I want to share this story with you is because I don't want you to go through the same thing that I went through when I was starting out. So let me share the story, and you'll see it'll sound familiar, I promise you. So I started trading options, and I started buying all these books because options are complicated and they have all these different parts, delta, gamma, theta. It's like learning a new language, okay? At least that's what it felt like for me. So I was armed with 800-page books like Strategic Option Investor and so forth, and I was studying away. And what I was getting from the books was that you never, ever, ever want to buy overpriced options that have high volatility, implied volatility. You only want to sell options that have high implied volatility, and you want to buy options that have really low implied volatility. All right. And no matter where I stuck my nose, that's where I read over and over and over and over. So that became kind of imprinted in my mind. You got to look for cheap options. Never, ever, ever buy expensive options. Only buy cheap options and sell expensive options. So I made some money and I was experimenting. So I went out. This is before the internet. This is mid to late 90s. So I went and got my Investor's Business Daily, which would come, the morning's edition would come at night, the night before. I would go to the newsstand about 9 o'clock at night, and I would pick up my Investor's Business Daily. And there was a column there that gave you the most overvalued stocks. So I decided to try my hand at premium selling because, how can you lose selling such overpriced options, right? I mean, every book I read said sell options that have high implied volatility and buy options that have low implied volatility. It was a rule of thumb. So I figured I'm going to pick the 5 most expensive, overvalued options, and I'm going to sell them. All right. Now, this is where I had a very high tolerance level for pain. I haven't been hurt by the market yet. So I was a cowboy. All right. This is where markets were good to me. This is before I started losing money. This is where I was just getting into things. I probably have been trading by this time a little over a year and a half, 2 years. I knew just enough to be really dangerous to myself, mostly. So let me continue the story. So I sold a bunch of options. I remember one of the companies was ReadWrite. I don't even know if the company's still in business, but I sold many. I sold about 5 or 6 different options. And obviously they were all in tech stocks or biotech stocks, and they were all extremely overpriced in comparison to other options. To give you an example, where a typical option, 2 strikes out of the money, was 50 cents, these options were $2, $3. I thought I discovered the Holy Grail. I thought that I made it, and I thought this was it for me. And guess what happened to each of these options or each of the underlying stocks a week later? Each and every one of them went against me. One stock became a takeover candidate and just jumped up. The other stock had positive earnings. Remember, I wasn't an expert trader. I didn't know what to look for back then. This was me this is me being a blind man, literally walking with a stick and just kind of trying to make clues as I'm walking ahead, doing this, let's see how much further I can get. So I had no idea what the hell I was doing. I thought I did, but I had no idea what I was doing. And again, I'm just being very frank with you guys, all right? I'm just being totally 100% honest with you. So to make a long story really short, each and every one of those options that I sold quadrupled or more in value. I think one of them went up 10 times. And you know what I learned from that little experiment that costed me almost $20,000? I learned that options are overvalued for a reason. This whole business about buying options that are cheap and selling options that are expensive, that might have worked 30, 40, 50 years ago. And I mean, this was back in 95. That might have worked in the 70s. But If an option's expensive, imagine the data, flow of data that we have today. What are the odds of me knowing something and you not knowing it, assuming it's public information? If there's a takeover candidate, it's going to be expensive. If there's a stock and it's making 52-week highs every day, the option's going to be overpriced. As a matter of fact, none of the stocks in one of our top programs, Momentum Factor programs, have ever seen non-expensive options. Their options are always overpriced. So what I learned was this: never, ever, ever pay attention to overvalued versus undervalued option. 95% of the time, the option is overvalued for a reason. All right? And as a matter of fact, I don't even compare option implied volatility to historic volatility anymore because it doesn't make any difference anymore. Amazon options have been overpriced grossly for 4 years now, 5 years now. Has that stopped Amazon from going up? No. So again, the best advice I can give you for buying options that'll actually make you money: stop looking at the value of the option and start looking at the underlying asset. Trade the option as if you were trading the underlying asset. Look at the correlation of the option to the underlying asset. I don't care how overvalued the option is. If the stock is going to go up 20 points, the option is going to increase in value. Stop taking the option apart and looking at it like a scientist. The market don't. So again, if you guys want to win in options and you want to buy the best options, you're going to have to look at the most overvalued options, because none of my momentum stocks that I choose ever have undervalued options. And if you hear traders talking about this overvalued versus undervalued, tell them it's a bunch of hooey. It's a bunch of nonsense. It works in theory. In reality, every momentum stock, every stock that's making new highs is going to have overvalued options. And every stock that's going to be making new 52-week lows and making lows and all-time lows is going to have undervalued options because nobody wants it. It's that simple. The more somebody wants an option, the more overvalued it'll be. The more someone doesn't want an option, the less valuable that option is, the less implied volatility it'll have. So if you want the best options, you want the hottest options, options with the highest potential to make money, big money, look for overvalued options. And again, it costed me a lot of money to learn this lesson. I don't want you to have that expensive experience. I just want you to learn it and embrace it. And guess what? It makes perfect sense.